Hi, I'm Steve Spencer from SMB Capital. Today we're going to talk about Twitter. And we're going to talk about it in the context of the process that plays out over a period of months when you're looking for a stock to put in a long-term bottom. And what I've done is I put together a series of charts from 2016, reactions following each earnings release. I dug up a few tweets kind of that shared some of my thoughts and some of the key issues that played out over time from the spring of 2016 all the way up through the summer. And hopefully the next time one of these longer term scenarios rolls out, you'll be a little bit better prepared to kind of deal with it and maybe understand the approach that I take. So the topic is finding a long-term bottom. And so what I do is I look for a base forming over a longer period of time. A base from a price action technical standpoint is basically just a stock that's forming a range over a longer period of time. And what that does is it gives you reference points to trade against. And it also gives you a way over a period of time to kind of judge what the buy and the sell interest is if the demand dynamics are changing. And so that's one of the things we want to look for. And so we'll take a look at the longer term, see what the base looked like in Twitter. And then what we do is, and we always do this on every time frame we're looking at SMB, when something has a catalyst, when a fresh piece of news comes out, how does the stock react to that news? And so in the case a stock is bottoming and a negative piece of news comes out, what does it do in relation to the base that is formed? Are gaps lower on initial negative news? Are they being bought? Are they being scooped right back up? And then the other thing that I'll do is when something has come down a ton is I'll actually go in and I'll look at some of the financial numbers. I'll look at what type of cash do they have? What's their earnings power? Earnings power means basically at their revenue run rate, if they bring in expenses, how much can they earn per share? What's the enterprise value? That's really the market cap plus any debt they have outstanding. And I actually tweeted that out when this thing was getting crushed earlier in the year. And after the April earnings came out, it was coming down again towards the bottom of the range for 2016. I tweeted out what their cash situation is and what the fundamentals, just to remind people that it was getting down to a price. And here's kind of why I look at the fundamentals. I don't really care about the fundamentals so much as something gets beaten down, and this happened with Apple a few years ago as well. When a well-recognized large cap stock gets beaten down 30, 40, 50, 60%, it then attracts the attention of a different type of buyer, a longer-term value type investor. And so when the market cap gets beaten down in something like Twitter, and it still has $3 billion in cash, and the revenue run rate is looking like it could hit $3 billion over the next 12 months, it brings in a whole different set of people who might be buying it. And so that's in the back of my mind as I'm watching, there's a new set of people who might be interested in it, and if it starts to behave a little bit better from the price action, it's something to pay attention to. So here's the daily from 2016. You can see the bottoming that happened at the beginning of the year down in the 14 area after the earnings release. It gapped down again in the spring report, and then finally gapped down but made a higher low following the July report, and most recently it ran up to $21 a share. And so I'm going to walk you through each of those reports. We had the January situation. And what happened in January was they smashed it in the after hours. It went down to 13 and bought it down at the 13. What I liked about that was it was bought at 13 and it very quickly popped, I think, $1.50, $2. And then it made a higher low in the pre-market the next morning and never during the day traded below 14, and over the coming week trended up very nicely. And so that kind of established a range going forward for the next couple of months. And then I tweeted out something in February where I said, hey, some pretty bad news in this stock. It's going to take a lot for this ever to trade below the low that's been established. And that was something to keep in mind if it came back down into that support again. So then we fast forward into April. The April report came out, and you can see the negative reaction there. But I circled an area there on the chart where it held that 14. That's where it never traded below. In the January report, in the after hours, it did trade below that level, but the next day when the market opened up, there were buyers at 14. It never traded lower. Here we are the next quarter. There are buyers there again. The other thing that I noticed in April was it caught a downgrade from Morgan Stanley, who's a large player, and shares were scooped up into that downgrade. And so we talked about at the beginning of the video, negative news. I don't know if a downgrade is necessarily a piece of negative news, but somebody who has influence on the market, a large analyst from one of the major brokerage firms in the country, probably top 2, gives it a downgrade. It's bought after the initial gap on that news. It's something to take note of. So then after watching the first 2 earnings reports and watching the price action develop from January all the way through May, at that point I was pretty convinced a longer term trade was in order, and it was still trading in the 14 area. And basically what I tweeted out was, I said, look, at 14, you got a couple of dollars of downside. I was giving myself some wiggle room. 13 was the low from the January after hours earnings report. But you really want to give it even a little bit more room, another dollar of downside from there in case some sort of bad news came out. You want to be prepared not to hit out at the bottom, so give yourself a little wiggle room. And $7 of upside. Basic rule of thumb, when something puts in a low, it gets beaten down, usually you'll find in the coming months when it bounces, will bounce 50%. The more speculative names will even double, but Twitter's not so much a speculative name. They have real earnings, they have real cash, and at any time, by the way, they could cut their expenses and be even more profitable than they are. They've been net profitable on an EPS basis, I think, for the last 3 or 4 quarters. But regardless, 50% up move off the bottom, and that also happened to coincide with the August 24th, 2015 crash low of $21 a share. That was my target. That's what I tweeted in May. Some people seem to like it. Then fast forward to July. So it's bounced, coming into the July report, it's bounced up to I think $18.5, $19 a share. I kind of laid out, I had a couple of quarters of earnings releases where I looked at the price action, and this is a kind of a snapshot from the SMB chat from Trader 90. What I was saying coming into earnings, things are good, this is what I think the upside is, they say something a little bit negative, here's where it should hold on the downside, and that played out pretty well immediately following the report. Immediately following the report, it did spike up to kind of the upside areas I mentioned. It failed there. The next day or two, it kind of went to the downside, it held there, and what we saw was in the coming weeks, it actually trended higher. This is kind of what it did after the July report. You can see it held the pre-report low there around $15.60 or so, and then in the coming weeks it traded back up to $21 a share, which is an area it had been targeting since May, and that's kind of how that has played out this year. Now, what I tend to do is I share on StockTwits and Twitter maybe about 20% of the things we talk about in our morning meeting, the ideas, but what we do is in the AM meeting, and this is a little plug for our AM meeting, it's really good for experienced traders. Whether you're a short-term experienced trader, we have portfolio managers from hedge funds, guys managing retail accounts, $50,000 accounts, up to people managing tens of millions of dollars. There's some useful stuff in there. We kind of break down what the in-play stuff is for the day. We have a written game plan. I'll talk about the bigger picture, longer term ideas, whether it's something like oil, which we've been involved in this year, whether it's something like Twitter. And then you'll get to see, if you're part of the morning meeting in Trader 90, you'll get to actually see the positions on the desk of some of the more experienced, better traders on the desk, as well as myself. And there's a lot of value there. And it's very affordable. I think we even have a free trial for a week, so you can check it out. So I highly recommend that you do this. Or you give it a shot. I plan on doing it at least through the end of 2016, so a few more months to go, at least through Q4. Hope the video helped you. Any questions on it, always feel free to shoot me an email.